Hey sis, let me ask you something that might feel uncomfortably familiar. It's 9:45 p.m., you're scrolling through your feed after a long day. You see her, the girl from college who just posted her "I made 47K on this AI stock in 3 weeks" screenshot. Then your cousin's husband bragging about his Bitcoin gains. Another influencer showing her perfectly timed options trade while sipping coffee in Bali. Your stomach tightens. You feel that familiar rush of "I'm missing out." Before you know it, you've opened your brokerage app, transferred money you were planning to invest steadily, and bought into whatever hot thing everyone is talking about. 2 months later, the stock drops 35%. You sell in panic. The cycle repeats. You tell yourself it's just FOMO, no big deal. But deep down, you know these emotional trades are quietly costing you thousands, maybe tens of thousands, every single year. That, Queen, is the hidden FOMO tax social media is charging your investments. How seeing everyone's highlight reel wins makes you invest worse, and the one simple filter that can finally fix it. Today, we're exposing exactly how social media is sabotaging your wealth, running the brutal 2026 math on what this tax is really costing you, and giving you practical tools so you can invest with calm confidence instead of panic and regret. My name is Barbie, and I spend way too much time thinking about the invisible forces that quietly drain women's wealth, especially the emotional and psychological ones no one wants to talk about. If you've ever felt anxious checking your portfolio after seeing someone's big win on social media, or if you've made investment decisions based on fear of missing out, hit that subscribe button right now. And if this video helps you protect even a few $1,000s this year, give it a thumbs up. We're diving deep with honesty, zero judgment, and real solutions. Look, here's the thing. We've been told that social media is just harmless entertainment or a place to get free education. Finance influencers say they're helping you by sharing their wins. The apps themselves push notifications about trending stocks, and people are buying alerts. But the 2026 reality is far more dangerous. Social media is quietly imposing a massive hidden tax on your investments through FOMO. It triggers emotional decision-making that leads to buying high, selling low, chasing trends, and abandoning proven strategies. I analyzed the latest data from LendingTree's 2026 Investor Behavior Report, academic studies on social media and investing, brokerage data on retail investor performance, and real user surveys. The average retail investor underperforms the market by 4 to 7% per year, largely due to emotional decisions. For active social media users, that gap widens dramatically. Many women are losing $3,000 to $12,000 plus annually in returns simply because of what they see online.
Here's what most people don't realize. FOMO isn't just a cute acronym. It's a measurable, expensive tax that hits women particularly hard because of how we process social comparison and the pressure to keep up in every area of life, including our money. Let's talk about why this tax is so powerful and sneaky. Social comparison is wired into us, but social media supercharges it by showing only curated wins. You rarely see the losses, the boring index fund portfolios, or the years of steady investing before the big payoff. Your brain registers everyone else's highlight reel as the norm, making your steady, responsible approach feel like you're falling behind. This triggers envy, fear, and urgency, powerful emotions that override logic. Dopamine hits from seeing someone's "I turned 5K into 45K" post make you want that same rush. Suddenly, your diversified portfolio feels boring. You chase the hot stock, crypto, or options play. For women, the effect is amplified. We are often socialized to care about status and appearance, and in 2026, financial status is part of that performance. Single women especially feel pressure to catch up when they see peers buying homes, traveling, or posting portfolio screenshots. The mental load we already carry makes us more susceptible to quick emotional decisions that promise relief or excitement. The result is a cycle of buy high on hype, sell low on fear, repeat, quietly eroding your compound growth year after year.
Let's walk through the real levels so you can see exactly where you might be. Level 1, the casual scroller, $1,000 to $4,000 per year FOMO tax. You follow a few finance accounts, feel occasional pangs of FOMO, and make one or two emotional trades per year. You mostly stay disciplined but still underperform by 2 to 3%. You tell yourself it's harmless, but that small gap compounds powerfully over time. Level 2, the active FOMO investor, $4,000 to $10,000 per year. You're deep in finance Twitter, Reddit, TikTok, and Instagram. You chase trends, buy the next big thing, and frequently adjust your portfolio based on what others are posting. Underperformance of 5 to 8% per year. This is where many smart, educated women sit. You know better in theory, but the constant stream of wins makes you act emotionally. Level 3, the full FOMO cycle, $10,000 to $25,000 plus per year. You're constantly comparing, panic buying dips, FOMO selling rallies, and jumping between hot sectors. Your returns are volatile and often negative relative to the market. At this level, the tax becomes life-changing. Many women here have solid incomes but feel stuck financially because their investments aren't compounding the way they should. Real example. My friend Rachel, 32, $95,000 salary. In 2025 to 2026, she lost over $14,800 chasing social media hype. AI stocks that crashed, crypto pumps she bought late, and options trades inspired by viral posts. When she finally muted the noise and switched to a simple, boring strategy, her portfolio stabilized and started growing steadily. The relief she felt was worth more than the money recovered. Let's put real 2026 numbers on this hidden tax. Assume a $150,000 portfolio. The market returns 7 to 10% on average. A woman paying the moderate FOMO tax, emotional decisions costing 4 to 6% in underperformance, loses $6,000 to $9,000 per year in returns. Over 10 years, that compounds to $85,000 to $130,000 plus in lost wealth. Over 20 years, the gap can exceed $300,000 to $500,000. That's the difference between retiring at 62 with comfort versus still working at 68, or between buying a home comfortably versus renting forever. The FOMO tax isn't small, it's silently massive. Here's the one powerful filter that changed everything for me and many women I've coached: the 72-hour social media detox filter. Before making any investment decision, you must wait 72 hours after first seeing it on social media, and you must research it without looking at hype posts or comments. This single rule breaks the emotional urgency and gives your rational brain time to catch up. Combine it with muting or unfollowing accounts that trigger FOMO, and you'll see immediate improvement in decision quality.
Now, you might be thinking, but Barbie, I learn a lot from social media, or I don't want to miss real opportunities, or it's motivating to see others win. Learning is great, but consumption without filters leads to emotional decisions. You can learn from high-quality, non-hype sources. Real opportunities don't require you to act in 24 hours.
And true motivation comes from your own steady progress, not comparing to strangers' highlight reels. A woman who pays the FOMO tax for 15 to 20 years can easily leave hundreds of thousands, even over $1 million on the table, compared to her calm, consistent counterpart. The woman who implements the filter and protects her mindset builds serious wealth through boring, consistent investing. She sleeps better, makes clearer decisions, and actually enjoys the journey. So, how do you stop paying the FOMO tax starting today? Here's your exact game plan. Audit your social media consumption. List every finance account you follow and how it makes you feel. Unfollow or mute any that trigger anxiety or urgency. Implement the 72-hour filter for every new investment idea you see online. Create a calm portfolio, a simple, diversified, low-maintenance strategy you commit to regardless of what others are doing. Set monthly no social media investing days where you review your portfolio in silence. Track your emotional versus planned trades. Seeing the difference is eye-opening. Replace FOMO scrolling with education from calm, evidence-based sources, books, long-form research, boring index fund content. Set clear rules. No trading based on single posts. Require at least 3 independent sources before acting. Celebrate consistency, not big wins. Track your adherence to the plan, not short-term performance. Build an accountability partner or small group that focuses on long-term strategy, not hype. Review and refine every quarter. Adjust your filters and rules as needed while staying committed to calm investing. Here's the truth that changed everything for me. Social media isn't showing you reality. It's charging you a massive hidden tax for the privilege of watching other people's highlight reels. When you implement the filter, mute the noise, and commit to calm, consistent investing, you don't just save money, you reclaim your peace, your confidence, and your financial future. You stop competing with strangers and start building real wealth on your own terms. You deserve to grow your money without constant anxiety. You deserve clarity instead of comparison. And you are more than capable of protecting your investments from the FOMO tax starting right now. If this video made you feel seen and ready to break free, drop your biggest FOMO trigger in the comments. I read every single one. Share this with a girlfriend who's been stressed by investment content. You've got this, Queen. Your portfolio and your peace will thank you. I'll see you in the next one. Love you.